What about the economics after the crisis?
Well, I would say you really have to sort of, I think the easiest way to get at it is to divide the world into, parts. So take the advanced countries, mainly Europe and America. I think we'll have what is sometimes called in the investment world a new normal. That is, we're used to systems that occasionally have a shock and then they kind of go back to where they were. I don't think that'll happen this time. And most people, other people don't either. It's a big enough shock that we'll stabilize, but we'll stabilize in a new place. So a convenient term for it is new normal. So we'll get used to something that's different that becomes normal. So what are its characteristics? Well, the financial industry will be completely restructured. It already is. I believe the government will eventually exit its ownership in most countries. So it will become private again. But it will be rather different in terms of regulation. And it's sort of hard to know exactly what that will look like. If I had to guess, I would say much higher capital, reserve, and margin requirements. Maybe those scaled to size so as to create an incentive to be small unless you really need to be big. So the regulation gets more stringent as the entity gets bigger. There'll be the hardest part to get at, and the part I think people haven't figured out, is how to deal with the complexity sort of transparency problem. And by that I mean the thing got so complicated, and if you drew a picture of the global financial system as a network, if you could, 40 years ago and now, I imagine it would look very different and much more complicated. That is, entities are related to each other because of derivatives and other things that are generally put under the heading of financial innovation. And so part of the problem is going to be to try to figure out when a financial system is becoming sort of unstable, or the systemic risk is building. And in order to do that, we can't just do the traditional things. We've got to try to figure out where this network-like connectedness comes from, and then try to minimize the potential damage. I mean, one way of describing what happened to us on this round is nobody saw the systemic risk. And so people said to themselves, well, financial innovations made it go away. Whereas in fact what happened is it made it go out of sight into the tails of the distribution. You know, Taleb calls these fat tails, or black swans. And so then the system goes along as if it's just fine and then blows up.
Speak.
Oh, I'm going back and forth.
Yeah.
And so I think that's part of the new normal. The simpler things are the cost of capital will be higher. The growth will probably be lower for a period of time. That may not be a disaster, but the advanced countries are still somewhere around 65 to 70% of global GDP. So when we slow down, that significantly slows down global growth. And then there's some unknowns, whether we actually have a kind of stagflation. It's a possibility. I don't think it's terribly likely.
Why?
Because central banks can print money. And so they can make sure we don't have a deflation. That doesn't mean that we can't have a really stagnant economy. And the reason I think we won't have that is that the attacks on the problem are really quite aggressive. And so you tend to get stagflation, as in the kind of Japanese case where they didn't have inflation, they just had the kind of stagnant economy, because they were relatively slow. And first of all, it was an enormous hit to the balance sheet. I mean, the Japanese asset prices, went down by much further than our asset prices or most of the developing countries. I mean, ours are going down by 25 or 30 trillion dollars. That's not a trivial amount of money, but it's not in percentage terms as big as the Japanese get. And then they didn't clean up the balance sheets very quickly.
But also, Japan central bank could print money.
Yeah, they did. They could, and so, and they actually lowered the interest rate, and they basically, you know, they had a balance sheet. They had a balance sheet recession that kind of stayed with them because the balance sheets never really recovered for a long, long time. Now we got the balance sheet part. That's what makes this different from most of the things we've experienced, and the balance sheet part's really important. I expect, you know, my honest sort of best guess, I guess, is that the asset markets are stabilizing, will stabilize in the next few months this year. The real economy in America and Europe and the trade part, which is relevant to many countries, including especially Italy, will take a lot longer. It won't feel normal until the end of next year, meaning 2010. And then just kind of slower growth and more regulation, higher cost of capital. In America, there'll be less leverage. Countries differ a lot in this. So in America, you had very high leverage in the financial sector and very high leverage in the household sector. In Italy, you have relatively high leverage in the financial sector and relatively low leverage in the household sector. So the household balance sheets aren't damaged so much, partly because there isn't as much leverage, partly because maybe they don't own as many assets, but mostly because their pensions, your pensions, are different, and you're not as exposed to changes in the balance sheet. In the extreme case, they're defined benefit pensions, and then you have no exposure. I mean, whatever the risk is, it's somewhere else. Government, the company, somebody else has the balance sheet risk associated with that. So at this point, then, what happens in various countries will be kind of different, one from another. I expect China, the developing world, I'll say this afternoon, will kind of split into sort of two parts. The strong ones who've weathered the storm pretty well, even though it was a pretty big hit, with China, Brazil, probably India, not sure about Russia, will probably kind of come back faster to relatively high growth, and then their potential growth will depend on how fast the world economy recovers and whether it's relatively open again.
So don't you think that China will be China that could be a factor of recovery? You think that China will benefit from a recovery but will not be the cause of a recovery?
It's not quite big enough yet to be a cause of a recovery. I mean, you can calibrate it pretty well. China's GDP is 3.5 trillion. Call it a quarter of the United States or a quarter of Europe. I mean, very rough terms. Okay? So 10% growth in China is about the same as 2.5% growth in terms of global demand or global GDP. Is 2.5% growth in the United States or Europe. So it's not trivial because they do tend to grow that fast. But it's, you know, China was growing at 11% before we got into the crisis. Then they got knocked down. Goldman Sachs' estimate for 2009 is 8 point something, and for 2010 it's 10.6. So they're going back up. Their recovery, people predict, will be more V-like, whereas ours is like this. But even going back to 10 or 11%, it'll help a lot. It'll help a lot in Asia because of their trading partners, but it won't really solve the global economy